I don't want to sit right next to you.
All right, it works this time. Welcome everyone. I hope you had a good lunch. It's for me personally, it's truly like an honor and a privilege to have one of the most, I would dare to say, one of the most known or respectable person in this crypto community that we are all here for. Doesn't need much introduction. A famous Princeton graduate, partner at Goldman Sachs, principal director at Fortress, and now the CEO of Galaxy. Please welcome Mike Novogratz.
Thank you.
This is first time speaking in Korea, right? And
you know, I've given a speech in Korea, but this is the first time speaking about crypto in Korea.
Okay, that's since we are already in Asia here, I know you lived, when you were in your Goldman years, you lived in Tokyo and Hong Kong, if I'm correct.
Yes.
For quite some time. How did this influence you, and in a formative way, professionally and personally, maybe?
Well, sure. So I moved out first to Japan as a salesman at Goldman Sachs, and I fell in love with Tokyo and the Japanese culture. And quickly, my boss, we were doing really well. My boss, I was complaining that salesmen at Goldman Sachs got paid a lot less than the traders. And my boss said, well, being a salesman is an important job, but it's a much rarer skill set to be a trader. And so then I said, well, I'll become a trader. And he moved me to Hong Kong to run the trading business. And we based an Asia business in Hong Kong, but it was for it's for Korea, Indonesia, and everywhere else. And what amazed me was just how dynamic the whole space was. And you know, I was just in Hong Kong last week, and it reminded me of how fast Hong Kong businessmen and Chinese businessmen move. We were talking to Wobi, and they told me they already have 1,150 employees. And I was like, I think that company just started a couple years ago. And so what I learned back in 1992 to 99 and was reinforced today is that it's one of the most dynamic parts of the world, and people don't wait, they just do. And so the other piece that I learned, which makes crypto interesting here, is that the Asian cultures, Chinese and Korean, and Japanese to maybe a lesser degree, love to gamble. I used to laugh that at the horse races in Hong Kong. If you would go to the horse race on a Thursday night, right? They have horse races twice a week during the horse racing season. One time in the New Territories and one time right in the middle of the city. The people of Hong Kong would bet 4 times more on a normal Thursday night than all of America would bet on the Kentucky Derby, our biggest horse race. It's a staggering statistic of just how much the Chinese like to gamble. And mostly the Asians like to gamble. So it marries up with crypto as a speculative asset.
Awesome. Speaking of crypto, let's talk a bit about Galaxy. Maybe most of the people here know about Galaxy, but give us a bit of an introduction. How did the idea start, and what did you want to create? And then what's the overall mission? And maybe, I don't want to be too speculative, but a 5-year prediction for where you see Galaxy in about 3 to 5 years from now.
Sure. So it started as a family office. I had left Fortress and decided I was just going to take it easy and run my own money. Usually when you leave Wall Street, you don't leave gracefully. You break some glass, you scrape your knee, your ego is bruised. And so I took some time off. I went to India to meditate, and but I looked at my portfolio, and I had a lot of Bitcoin, and I had a lot of investments. I had an investment in Corbett here in Korea. I had an investment in Bitstamp, in Zappo, in all kinds of portfolio companies that I'd made a few years earlier. And I had a college roommate, Joe Lubin, who now runs a big company called Consensus. But at that point, it was a very small company, and I decided to go visit him and thought he was a little smarter than me, and he might be able to tell me about my portfolio. And it so happened I walked into his office and was amazed at the energy. It was a small company, 20, 25 people. I thought it was going to be 2. And I was like, how'd you hire 25 people? And they were literally plotting out a revolution, a decentralized revolution. And it was the first time I understood that crypto was a lot more than just a speculative asset. that this was a social phenomena, it was a cultural phenomena, and an economic phenomena. And that the people that were getting involved in it really cared about changing the world. It's often easy to think, oh, this is just about the money. But when you meet the guys that are at the core of it, if you sit with Vitalik or Alex Marcos, who's a core developer, or any of the guys, that they really do care deeply about a new world order. It came out of the breakdown in the financial system in 2008, and then Europe broke down again in 2012. It came as people feared central authority. And so I got inspired, and I bought a bunch of Ether, and it was at like 96 cents. When you buy something cheap and it goes higher, you start paying a lot of attention to it. And so I started making a lot of money, and I realized, I did an interview with Bloomberg, mostly as a favor for a friend, Eric Shacker, who's a reporter there. And next thing you know, I started getting phone call after phone call and email, and tons of people watched the interview. And I thought, I have this opportunity to participate in this really cool space. I'm only 52 at that time, and I'm like, I've got another chapter in my life, and what a better way to use it than to see if I can contribute to this ecosystem. And, a family office can only hire so many smart people, but a company that's expanding can hire lots of them. And I thought to be effective in this space, you need a lot of smart people. And so we decided to start this company, Galaxy. My brother named it because we love Star Wars. But it also was symbolic of wanting to be in the center of this space that's exploding. And we have a pretty simple mission. Originally, I thought the mission was to convert institutional investors to crypto, because I came from the institutional side. I was one of the, either the lucky ones or the silly ones that started talking about Bitcoin before it was fashionable. And so that was the first idea of a mission. But what I really realized is all these new ecosystems, all these new young companies, they need guidance, they need banking services, they need consulting, just maybe more so than the institutional guys who are going to figure it out. And so we decided to become a merchant bank. I first called itself the Goldman Sachs of crypto. And then I started thinking, well, maybe it was more like Drexel Burnham, who, Drexel before it went out of business, really was the bank that helped credentialize junk bonds and high yield. And it was not just Mike Milken, it was Mike Milken and an army of people that have gone on to be wildly successful. And so we have 4 businesses. We have an advisory business that we are just starting up, where we're going to both advise companies on mergers and how to set up ICOs and then raise capital for them. It's a broker-dealer. I do believe that the whole process of raising capital, the whole ICO frenzy of 2017, is going to look very different in 2019. We have a trading business that includes macro trading. We're starting an OTC trading business, an electronic market-making business. We have an asset management business where we have a partnership with Bloomberg. It's the Bloomberg Galaxy Crypto Index. I actually wanted it to be the Galaxy, and then Mike Bloomberg was like, no. But that's where we'll take other people's money and run it as a pure beta product. And our biggest business is a direct investment business. We invest in businesses all around the ecosystem, from ICOs to infrastructure companies, to wallets, to custody. And so a big, diverse portfolio.
So, yeah, you mentioned you need a company to hire so many people. How big are they? You're now expanding your office in New York City?
We took a new floor. So we're about 70, 75 people right now. We're opening an office in Hong Kong and one in Tokyo. And I would bet by the end of the summer we'll be 100 people. And hopefully that's enough for a little while. It gets very expensive to hire people in New York City.
Maybe some of the institutional partners in Korea want to open a Galaxy office in Seoul as well, so please come forward afterwards.
I've been I was at the Hashed offices yesterday. I'm here because Alex convinced me that I have to come to Korea, and so shout out to Alex. But I love the energy of the space. There was young energy, there was a vibrancy, and so we're certainly going to, do business here in Korea.
Speaking of institutional partners and investors, there's a lot of movement in the space now. Goldman had their crypto trading desk open last year, I believe. I'm sure you followed the institutional game a lot. What do you see that changed in the last year, or maybe even two, and how do you foresee this in the next year? And perhaps if you have some concrete examples about who you think is doing it right or wrong.
The biggest change is 2 years ago, if you had gotten to meet with an institutional investor, they'd have known nothing. And they'd be very interested to hear you talk, and then you'd leave. And now, when I go meet with a CEO or a CIO, I'm surprised at how much they know, at how much work they've done. Most of them haven't taken the first step in terms of participating, but whoa, they're doing a lot of work. I tell this story, I went to visit Jeff Sprecher, who's the CEO of ICE, which is the parent company of the New York Stock Exchange, and about 30 other exchanges around the world. They're the biggest exchange company in the world. And I thought I was going to give him my Bitcoin story, and after about 2 minutes, I just shut up and started listening. He knew so much more about the plumbing and the future of how coins will be traded than I would ever have imagined. And so I think that's the biggest difference. You know, what happens at a lot of institutions, our story with Bloomberg is really telling. You know, I had a young guy on my team who had this idea. He went up, found the group that does indexes at Bloomberg. Bloomberg has 350 people dedicated to just indices. So it's a proper business for them. And they started pitching this idea of creating a crypto index with Galaxy, and it was really exciting for us because it would help brand our company, and it was a new company. And you know, Bloomberg is one of the best financial news organizations in the world, and the most prominent. And it got up to the management committee level, and then it was like, oh, sorry. And my guys were sad. And it took a call to the chief, to the mayor, and it wasn't that we convinced him. We opened the eyes to say this is not all about, you know, money laundering and North Korea and drugs. It's about a complete system change. And you should just listen to your own people. And you know, a day later, Bloomberg said we're going to do this index. And so I think that story is playing out over and over. Crypto is a millennial-led revolution. I joke that I'm the oldest man in crypto, but I met one guy yesterday that was a year older than me. Made me feel very good, other than the fact that he had his hair. But there's a push from the bottom of these organizations to say, hey, we want to participate in every one of the places I visit. And so I see a constant march. Mm-hmm. Now listen, to get institutional investors, there's a few things missing. The biggest thing missing is custody. And that's kind of strange to say because we have lots of good custody solutions, right? Zappo is a very good custody solution. BitGo is a very good custody solution. There are plenty of them out there. But if you think about how institutional investors operate, if you're the state of Wisconsin, or if you're a pension fund, it's hard to tell your boss if something went wrong. Well, I had my money with BitGo or Zappo. You know, people have never heard of those places. And so what you really need as a bridge step is you need a trusted name custodian. You need a Japanese bank or Hong Kong Shanghai Bank or State Street or ICE or Goldman Sachs to allow institutional investors to feel more comfortable. And that's going to happen. We've been visiting tons of these places and participating in conversations, maybe as partners or maybe just as advisor. For me, it doesn't even matter if I participate. I go to bed praying every night that I wake up and I read the newspaper that State Street's decided to custody crypto, because that would be a giant push forward in money coming into the space. I think it's going to happen sometime. I think it's going to get announced sometime in the next 3 to 6 months, maybe even sooner. And I would caution you one thing. There'll be a lot of excitement around a big announcement, and prices will go up a little bit. But because these are institutions and not retail, they're not going to invest until the solution actually exists. And so prices will go up, but they're not going to really rock it. We won't take out 20,000 in Bitcoin or 1,300 in Ethereum until there's a proper institutional custodian. The second piece that's needed and coming is regulatory clarity. Because the US controls the global banking system through, it really needs clarity in the US first. It's coming. I have been wonderfully happy with the posture of US regulators. First of all regulators missed the crypto move, right? Crypto was 98% retail. It was the people's revolution. It was Mr. and Mrs. Watanabe. I'd say Mr. and Mrs. Kim, but that probably means that every Korean would raise their hand. It wasn't BlackRock and State of Wisconsin and Hermes Pension in the UK. And so regulators miss it. Regulators come from the institutional world. The head of the SEC worked at Sullivan and Cromwell. They come from the JP Morgans and the Goldman Sachses. And so they missed it. And it was small, it didn't matter. And then last fall, October, November, December, January, there was this frenzy, this craziness where prices went up. And regulators said, oh shit, we need to do something fast. And so what they did in lots of places is just say stop. Or they said, put the brakes on. And they were giving themselves time to understand what was happening. So the SEC, they subpoenaed companies, they really dug in. And the first thing they decided is let's go after the fraud and let's go after market manipulation. And let's slowly set rules as we understand it better. And so it was a really, really, really big deal that they said Ethereum is not a security. Because they gave a path forward for most of the tokens issued in the last 18 months were security tokens. They were issued without having a proper decentralized ecosystem to start. And so, but what the SEC did, and I think what's just going to happen is you could have started as a security token, but now you're a utility token. I think you're going to see some people they're going to say, yes, you should have known better, and now we'll make you a utility token. But I don't think they want to crush the whole system. I think you're going to see them take out a lawyer or two. I met a guy yesterday who was telling me about, his old firm getting shut down and a lawyer losing his license for 30 years. And so regulators are supposed to protect the little guy. And they were doing a crummy job of it. And I think, so that's changing. And as we get a little bit more regulatory certainty, you're going to see the institutions feel much more comfortable coming in. And we need them. People say, well, why do we need the institutions? Aren't we going backwards? You're not going to change the world on $500 billion, $500 billion of market cap, right? For crypto to really fulfill its mission, we need lots more money in the system to fund lots of these projects.
Interesting that you mentioned the regulatory part, and there was one of the discussion this morning was focused on that. And considering that we are in Asia, in East Asia, there's very different approaches happening. Korea is having recently a bit of a change of heart. Japan was tiptoeing really carefully in a way, and a lot of people that I meet outside of Japan think of Japan as a crypto heaven, but I think they still have a long way to go on the regulatory side. And then there's China, who of course completely banned everything, but huge amounts of traffic come through there. How do you see this?
So it's interesting. I just came from Japan and Hong Kong. I think Japan felt really foolish when they had that big hack. The FSA felt like they had mud on their face. And so they said, stop, put the brakes on, no new projects. They didn't shut it down, but they put the brakes on. The positive side is, and I was just talking to one of my old Goldman Sachs partners who runs a big company there. He was telling me the regulators there have worked stunningly hard and are stunningly smart. And we're getting very close in Japan for them kind of reopening the markets under certainly a more regulated form. And so all the big exchange companies are working their tail off. They'll make less money because their margins will be smaller because they'll have lots of security precautions and accounting systems in place. In the long run, it becomes optimistic. It's bullish because people start trusting the system. And so I think in Japan, they're going to turn the taps back on. And what's interesting is all these companies are spending a fortune now to build these systems. And so they're going to spend money on advertising. They're going to get people back in the game because now they have expensive operations. There are 4, 5, 6 big companies that have made major bets. Very different than the decentralized, or the crypto-to-crypto exchanges that you saw. Bitfinex has 97% margins. That's because they don't spend a whole lot of the money they're making, right? In my mind, that's probably short-sighted. In the short run, they make lots of money. In the long run, this market is going to look more regulated. It just is. My story, and I don't know the Korean market as well, but the part of the story I like about it, I remember when they decided to shut crypto and everyone started protesting. They're like, no, you can't take our crypto. And there was this petition that went to the Blue House, and there was 50, 60, 70, 80,000 signatures. Regulators listen. Politicians listen, regulators don't. And so I think that, there's an optimism there talking to people. What Asia is missing is the engineering talent. It's the coders. It's that piece of it. But in terms of the enthusiasm and trading infrastructure, quite frankly, it's ahead of the West.
Speaking of regulators still, do you, back to the States, do you as Mike Novogratz or Galaxy talk directly to the regulators? Do they reach out to you or you reach out to them? How does the conversation go there?
Because we've been in this period where we're taking our company public through a Canadian reverse takeover, we've been mostly going through lawyers. Post-float, we'll have a much more direct conversation. But we're invested in companies like Templum, who literally talk to the regulators every day. The other part about this community that's neat is at the core of it, there's a spirit of collaboration, right? These are open source systems. The whole idea is based around collaboration. And I find, consensus, Joe Lubin was one of my college roommates. He's a wonderful source for me, right? We collaborate. And so I'm talking to enough people in the ecosystem that are talking to the regulators almost every day. The regulators are engaged. They need to be, and they are.
Speaking of projects, like maybe bigger projects in the blockchain space, in the crypto space, whether it's Ethereum, EOS, and where do you see them going like 2 years from now? They raised they raised a huge amount of money.
So listen, I'm not a computer science guru, though I've been trying to learn at least a little bit. The way I see this whole system, we have 100 blockchains, roughly, 30 or 40 in China alone, and then another 60 or 70 outside. They're all trying to become the same thing, right? They want to be this decentralized global supercomputer that processes data, that authenticates data. And so it's a race to see who's going to get adoption, who's going to get people to, both developers to build on those blockchains, dApps to build their companies on the blockchain. None of them are fast enough right now for any real institutional applications. And you're going to start seeing some of those. You're going to see sidechain, on lots of these blockchains, state channels or Plasma in Ethereum or Lightning Network in Bitcoin. They go from very decentralized to less decentralized, right? EOS is going to be, it's already, I think, the fastest blockchain, and it's only 3 weeks old. Its critics will say it's not decentralized enough, that there's 21 nodes, the Chinese control a lot of them, and it's 3 weeks old. Give it some time. Let's see how it develops. My philosophy is, don't think you're so smart that you're going to pick the one winner. Is it Neo or Archain or Thunder or Ethereum? Listen, Ethereum has got a giant lead. The most developers, there's unbelievable human capital in the system, but they've got a big transition to make, right? They've got to go from proof of work to proof of stake. You got to deal with a mining community that's going to lose money on that whole process, and so we'll see. I find Vitalik one of the smartest guys on the planet, and so I wouldn't want to short him. I also think the market is going to determine just how decentralized it needs to be. I use the expression, is bulletproof glass 14 inches, 18 inches, or 24 inches? You don't really know until someone shoots at you. And so this is still an experiment, right? The whole crypto revolution is like a third grader. We're not PhD students yet. And so how can you decide which of the 100 blockchains to bet on? Is it the best computer science? Is it the fact that our chain uses row calculus and that's going to solve something important? My simple way of thinking about this is which systems have the most money behind them to encourage developers, to encourage products to be built on. And so it's one reason I give EOS a good chance of being successful, right? Block 1 raised a fortune. They didn't go out and say they were going to raise a fortune. They were just selling tokens. The market gave them a fortune. But now they have this monster war chest. They have a very good architect in Dan Larimer. And we'll see. You know, I'm optimistic. The Ethereum project, because it was first, and quite frankly, because of Joe Lubin, because of his idea with consensus and getting all the ERC20 tokens, and you know, they have a monster war chest, and they have an unbelievable community globally, and so hard not to bet on them. One bet I didn't make because I was not thinking fast enough was Telegram. Right? People like Telegram, everyone hated the white paper, they hated the valuation, they hated the fact that it was in the bear market, right? It was post-January, they were raising money when crypto was hitting the skids. But what you forget is, now they've got $2 billion in a war chest. They've got a stunningly good CEO. They've got a great technical side with his brother. They've got 210 million users. And let me tell you, user acquisition is expensive. They already have 210 million. And quite frankly, all of these blockchains are open source. They can fork whichever they want and start from there. And so, you know, I wouldn't bet against them. I'm also not smart enough to know how this is all going to play out. Are there going to be mergers? Are we going to, you know, we're invested in a company called Cosmos, which is one of the interoperability plays. Will interoperability be enough that the blockchains themselves, you know, aren't as important in essence? You know, if anyone knows the answer, they can come see me and tell me, because I think it's going to be one of the most fascinating things to watch. Mergers sound good, but like a blockchain is a government. And so it's hard to merge two governments, right? It's a set of rules. It's literally like a government. And so while merger sounds like a good idea, I don't see how they work. And so I don't know, maybe some will die out and others will grow, but the ones I'm betting on are the ones that either have unbelievable science, and that's my friends telling me, or ones that have big money.
Interesting that you mentioned big money, because I read quite a few articles, with critiques of ICOs and crypto, where they say, I'm sure this would be interesting to a lot of founders in the audience here, where, you know, companies raising too much money. It's 1.7 or 2 billion for Telegram, all in private sale, I believe. But then there's quite a few companies that raise 200 million, 100 million, $50 million all around the world. And then I read these articles, they said that it's too much money. You have too much of a war chest. Is that actually a real problem?
You know, Mae West used to say, too much of a good thing is a great thing. I don't think so. I think, listen, you need a world-class CEO, and mostly you need the ability to create a community, right? Each token is a social network. And so you need a story and a real application, you got to solve a problem that creates a community. And I'm sure some people can do it with a whole lot less money. I do think it's going to get more expensive because the competition is up. Engineering talent is more expensive. Try to hire a VC blockchain guy out in the West Coast right now, and you know, the 25-year-old, the 23-year-old says he's worth, you know, more than I get paid. You know, there's a real demand for talent, and so I do think money's going to make a difference. Now listen, that doesn't mean just because you raise money you're going to be successful. There are a lot of projects that just got lucky, that they got in at the right time, and there were good promoters who, quite frankly, weren't registered, weren't broker-dealers, did it, you know, roughly breaking the rules, but the rules weren't clear enough, and so these projects raised a bunch of money, and some of it will get squandered away, and some will get stolen even. And so that's part of the cost of, I think, the first leg of this revolution.
I think there's going to be a lot of books written about failed crypto projects or scams or something, but it's part of the growing of the ecosystem, I guess.
We saw a business actually to fund lawyers to sue all those. But there's a litigation, you know, litigation finance fund set up because there was a lot of frauds. And the sense of justice is, I want that money back.
I mean, and back to overall understanding of crypto, like my mom probably read in the papers about it, and she thinks it's a probably get-rich-quick scheme. She said something about Bitcoin, and then my cousin, who reads a lot, read the Silk Road things, where they see this as a vehicle. Obviously, I assume the audience here is much more knowledgeable about this and about blockchain, but how do you see this becoming a household item? Is it education? How do we get there where people are?
Well, interestingly enough, in some ways, crypto is going to be the back of the television set. Like, you watch TV, you don't really care about the back of the TV, right? It's the payment networks, it's these ecosystems. Even if you think of something like a decentralized Uber versus Uber, you're going to have a user interface on your phone. It's going to look like an app. Instead of a U, it might have a D for Duber. That joke gets more laughs in the US. So your user experience of hailing a car, paying for it, you're going to still have a WON price. You'll buy tokens if you don't own them to instantly pay for your ride. And if you want to buy into the system, you'll keep tokens, you'll hoard some. And so it's a slow education process, but I do think you're not going to see mass adoption until the user interface doesn't feel like you're doing something that new. And that's 3 to 4, 5 years away, right? We still got to build the blockchains fast enough. We have all these proof of concept, small experiments going on. I think the real killer app that's still not done yet is identity. And the psychological shift that people are going to have to go through. So why do we care so much about electronic identity? If you can have a self-sovereign identity on the Web 3.0, you all of a sudden can start being more in control of your data, your driving data. Right now, if we all take an Uber, they know exactly where you drive. And so if you're sneaking out to visit your friend, people know exactly where you went. Uber does. And they've used that data illegally. In China right now, almost every financial transaction happens on one or two, WeChat or Alipay. And the government gets that data. And all of a sudden then you have, that wouldn't be such a big deal. But we have this giant monster, a dragon with 3 heads called AI, who loves data. And AI plugs into that data and instantly knows everything about you. They know you're pregnant before you know you're pregnant. Or they know you're gay before you know you're gay. They know you might be a dissident, or you might not like the government. And it's a really, really scary idea of these big institutions, either governments or companies, owning all our data with AI. I think of it most in terms of your DNA, right? At least my spending data goes away. My DNA is there forever. And lots of us in America, we lick this little stick and we send it into Ancestry.com or 23andMe. They now have our data forever. That's a scary thing. I've got a wife and a daughter who have a bad gene for Alzheimer's, which means no insurance company should ever insure them. But this lady knows, Sergey Brin's ex-wife. She seems to be a nice lady. I hope she doesn't do something wrong with the data. It's crazy that our personal data is held in these big institutional silos. And so the best use case, and actually almost the essential reason to exist for the blockchain, is that level of privacy. It makes China so complicated, right? You have a president who has decided he wants the chance to be an emperor. Right, he's extended terms. He can stay as long as he wants if his party keeps him in, and he's got cameras on every corner that facially recognize you, and they know what you're spending. And so it's the exact opposite of what the blockchain wants to do. And so it's going to be really interesting because I see all this energy in China. Some of the biggest players are Chinese. There's great companies, and there are regional governments that are investing and making it very blockchain friendly. But philosophically, it cuts against exactly what the blockchain is there for. And so it's going to be really wonderful, or really interesting to watch how that all develops.
When are you speaking in China next?
Ooh, probably not anytime soon. Listen, these are not hard conversations because it's not like you can say this is not happening, right? And so there are plenty of enterprise applications of blockchain going on right now. It's not nearly as exciting to me, but I asked Joe Lubin recently, who's got a big company and sees a lot of this, and I've asked a few people, and my estimate from not just myself, but asking lots of people, is about half of the energy in crypto or in blockchain is private and half is public. Half are enterprise solutions, a group of companies getting together, one company creating their own blockchain. They're not decentralized systems, they're using a better database, are quasi-decentralized. That's not terrible, it's a way that people are gonna get comfortable that this technology works. And I think in the long run, if we really learn to trust this giant public utility, you'll plug those private permission blockchains into the public blockchain. But in places, it was very cool to say, I like blockchain, but I don't like crypto. That doesn't work for me because it's the token really that drives use, that drives adoption, that creates the social network. And so, yeah, you can have some enterprise solutions, but the revolutionary piece of this is really the public blockchains.
Identity is, you mentioned right now, right before, it's a great use case, obviously. Do you have a couple of companies that you came across? I'm sure you get pitched all the time, early stage or later stage that are, I mean, not too late, obviously, that are on this exactly focusing on identity?
I don't have I mean, listen, Uport, Civic, we were early investor in Civic, I think. I sold a lot of my early ICOs. And so, I was an early investor in Civic, and I don't think I own it anymore. So why did I sell ICOs? Last year, we had this crazy, you could buy these things, and we often were lucky enough to get in at a discount. You could almost close your eyes and watch them trade for a week and then sell them all, and they would come back down. And I know people love to say hodl, right? Hold on for dear life. That seemed crazy to me in the ICO space. And I tell you why. Most of these ICOs are investments in venture, companies. Companies that don't exist yet, that they're these ideas. And so they're replacing venture capital. Well, it takes 3, 4, 5, 6 years to build a company. And so we had a false sense of liquidity, a false sense of what these guys might do. And after a week or two, you run out of new information. Nothing changes. Hey, I hired one more guy. And so without new information, prices go back down. And you can't have 2,500 store values. You can have a couple, Bitcoin, vying to be this decentralized gold, a store of value. And so there's a story every day in that. And maybe you can have a few major blockchains that are getting new news vying to be this supercomputer, and you can think of Ethereum as gas, but in decentralized online gambling, where you can't gamble for another 2 years, the story, it's good and then fades away. I love Funfair, and I'm going to rebuy the tokens soon because they went up, and now it's getting close where the guy can start gambling. But before I do, we'll do what we're supposed to do and all you're supposed to do. Let's look at the other 4 or 5 or 6 offerings in that space, and let's see who has the best chance of building a community, who's the best CEO, who's got a war chest so they actually have the money to do it, and then you can start seeing adoption. So it's time to re-engage in those products as an investor, but it's the smartest investing stance over the last 6 months has been to own none of them, right? Because the air of that craziness was all coming out of the system. I actually think we've bottomed out, or we're very close to having bottomed out in the coin system, in Bitcoin, Ethereum, EOS. Will I be right? We'll see. But it feels like we've been bottoming out, and people are sensing the institutions are slowly going to come. And so, but I don't think it really takes off again. Like I said earlier, until we get custody, until we get some regulatory clarity. And so markets can go up and go down, and they'll go sideways. why I'm not pessimistic at all, and I'm actually quite bullish, this space and this system, is every time I come to a place, conferences are packed. Conferences like this are packed, and if you go to the DevCon conferences, my friends who are developers, they tell me they're packed. The private rounds are still hard to get, right? We invested in a company recently, Alpha Point, and it's not like you're getting a great deal. They're fair deals because there's 3 other people that want to make that investment. Partly that's because the venture community in America broadly missed Chapter 1 of crypto. Mark Andreessen famously didn't, Fred Wilson famously didn't, but the whole community as a whole didn't really participate. Quite frankly, their documents didn't even allow them to participate in coins. Well, they've changed all those documents. And the big buyers of Telegram were venture capitalists, were the benchmarks of the world. And so you're seeing that money rush in. And quite frankly, that's the first place institutions are making their bet. It's safer to make their bet there, right? If you bought crypto 3 months ago, it's down 50%. You're looking at your boss, you look like a jerk. Sorry, boss. But if you invested in a venture fund, they don't even get a P&L for 6 years, And so no one really puts the pressure on you. And so you're going to see the venture community and the private side of this market actually stay more buoyant than the public. That makes me bullish the overall space. The bet that I'm making, and lots of you guys are making by dedicating so much of your life to crypto, is that, sometime in the next 2 to 3 years, 4 years, the herd of institutions come running into this space. Without it, we're all going to be like, oh, geez, we're running in circles. I'm fairly certain, and I'm making a big bet that that's going to happen. And I don't do that just because I'm guessing. I'm seeing this piece by piece by piece every day.
I'm going to open to questions soon because I can do this for hours, but I know there's probably a lot of questions from the audience. One semi-personal question in the end. You used to be a wrestler in a university and in college. How is wrestling like or not like investing? How did it fit into?
Wrestling toughens you up, and nobody wins every match. You get your butt kicked, and it hurts. And trading is a lot like that. You're not going to buy every low and sell every high. And so you've got to learn from that mistake quickly and get back up and not care so much. Wrestling is also a sport that takes a tremendous amount of hard work and discipline. You just aren't born a good wrestler. And it's a non-glorious sport. The hard work, no one really pays attention to. It's push-ups and sit-ups and running and waking up. And you're not going to be a good investor, a crypto investor or any kind of investor, without a lot of hard work and a lot of discipline. You have to have a process that you approach the market by the same way every day. You can't one day do X and the next day do Y and think you're going to be great. You can't think, I was born a good trader. It doesn't work that way. It comes like anything, with study, with work, with learning, and with mistakes.
Does anyone have any questions? If you do, please, there are 2 microphones on each side of the stage. So just please kind of walk forward and then introduce yourself, perhaps. And yeah, there is a mic here. You can take it off the stand, I think, so it's otherwise a bit too low.
You can do a little karaoke if you want as well, just since we're in Korea.
Yeah.
That's noraebang, actually. Hey, I'm Heslin Kim. I had a question about security token offerings and what your opinion is of that. Do you think that will be the next logarithmic growth in the space?
I think it's going to be a grind. I think security tokens are coming, and I think most token offerings are going to be issued under some regulatory framework, so they're all going to kind of feel like security tokens. What's a lot of the big projects, if it's a fractionalized real estate project, who are going to buy those originally? Mostly the real estate investors. And so while I think, listen, we're making a very big bet on securities tokens, it's not going to happen overnight, because now I've got a double sale. I've got to sell the real estate investor on the real estate, and I got to sell him on the token. And what am I really adding to him? I'm adding liquidity and maybe more operational efficiency. I don't think that the general population are going to buy specific securities. If it's this block of Hong Kong real estate that we're securitizing in a token, I don't see it as, or even if I can sell it because I've got a great sales force, the liquidity in it will die. And so a lot of these securities tokens will end up being like stocks with very low liquidity that, are listed on an exchange but never trade. And so I do think you're going to see lots of security tokens, but it's not going to be you're buying them and they're 50x, right? When you buy an asset, in almost any market in the world, if you could be guaranteed 7% return per year, that's great. And the crypto universe, they paid that just to sit in the seat, right? There's not one of the kind of crypto guys that wants to buy a 10 or 12% return token. Like, that's the securities world, right? The best investor in the history of the US, maybe Warren Buffett, compounded at 16%. Would you buy a 16% token? I bet half the crypto world wouldn't. And so it's an educational process that's going to happen. And so I think you're still going to see the excitement around these new ICOs that could create a utility, even if they're going to be sold under some regulatory framework.
Yeah, do we have any more questions? I mean, there's a blinking thing here that says time's up.
But we'll do 3 more questions.
We're going to 3 more because, they're going to drag us out eventually.
That man right over there. Yes.
So I definitely buy your argument that the herd will be coming sort of institutionally, but I'm wondering sort of how we get there from here. So the market's kind of really sort of tanked to 200, 300 billion size in crypto, and then, and so a lot of people, the moment there is a rally, there's a lot of sort of hurting crypto investors out there. I suspect a lot of them are going to want to run for the exits if there is a sort of mini rally of some kind. So I'm wondering kind of in terms of the market, how do we get to the kind of multi-trillion-dollar market that these big institutions playing in it? Sort of what's the ride going to be from here to there?
Okay.
Yeah. So I think there's a couple things that will happen and have to happen as we get the architecture for more people to participate, and it's being built in every freaking company. I mean, everyone I meet with, risk management architecture, trading architecture, liquidity being tied together. So as we get that architecture, you'll see the first early adopters of institutional, right? I went up in January and I talked to one of the Canadian pension funds, and I thought I was going to, again, be giving a lecture to people that didn't know much, and they brought 80 people into a room, and they were asking me about Merkle trees, and I was like, oh, God. They knew their stuff. They haven't invested yet, but they'll be one of the first, I guarantee it. And so you're going to see some early adopters that are going to push the market, and then it becomes the same FOMO. So what's interesting is, why did the market go up so much last year? We were selling a story, right? I think I made a lot of money because I'm a good salesman. We were selling a story. The whole crypto world was selling a story of a new way of structuring, right? Of Web 3.0. You couldn't take a decentralized Uber. You couldn't do anything. Markets get ahead of themselves. And so it's going to be the same thing with institutions. If they wait until there's a giant decentralized system, they've missed a trade. And so they're going to buy when there's safety in the architecture of the place, not necessarily clarity in what the future looks like. And so the early adopters are going to win. And yes, there's a wall of sellers at 10,000 or a ceiling of sellers at 10,000 in Bitcoin because lots of people bought over 10,000 and they were horrible buys, right? Above $1 in Ripple, above 800 in Ethereum. Just looking at the charts, you got to chop a lot of wood out before you break through those. And I do think you're right. You're going to trade up and trade down and trade up and trade down. But you're burning off those bad longs. And as we spend time, the architecture is being built on the blockchains. The token models are being refined. It's one thing I didn't talk about. One of the big changes in 2019, late 18, is you're going to have to understand what the tokens actually do, why they're valued. Like I, even myself, made lots of mistakes. I bought things because it was good team, and there was momentum, and it was the right deal, and I didn't really understand how the token economic worked. And now I'm forcing my team and forcing the ICOs that we participate in to really be able to articulate what token economics are working. And quite frankly, all the token economics, it's still experimental. You know, some burn tokens, some are futures, some are, you know, Ethereum is a gas, and EOS is actually ownership of that piece of the processing power. It doesn't go away. You know, so EOS and Ether are very different tokens. And so really understanding that token is an important piece, I think, of going forward. And so as all that stuff happens, we'll burn that retail off and then head higher.
To follow up on the question, when is the multi-trillion-dollar market going to happen?
You know, it's you know, if I knew when custody would come, I would tell you. But I think sometime within the year.
Oh, wow.
We will take out 10,000 within a year.
Next question, perhaps. No.
Hi, Mike. So I'm Christy, based in San Francisco, work for Kinetic, based in Hong Kong. So all the examples you mentioned, the companies, I noticed that they are based in the US. Have you made any investments in Korea or China? If so, like how do you evaluate I guess you use different metrics, I assume.
Well, listen, so I was a day one investor in Corbett, but I've since sold that. In, I think, February, we sold our stake to a Korean guy who bought it up. I haven't done any ICO investments out here. We're in the process of making an investment right now in Tokyo with an architecture company, you know, but I can't announce it because I don't think we've publicly said what we're doing. One of the reasons we're opening up here is we feel like we missed a lot of the excitement. I was an investor in ELF, that ICO. I met the guys in New York, and it was one of the fastest wins I've ever had. 2 weeks later, it was 10 times my money. But that was kind of just in the ICO frenzy. We hadn't done the deep dive that we now do before we make investments. But we're opening up here partially because you know, 2/3 of the world's population is in this part of the world, and a tremendous amount of crypto energy and creative energy.
One more short question, because someone has been standing there for a long time. Please make it brief, because they're showing me this behind the stage. I don't know what it means.
One-word answers.
Yeah.
Yes.
Yeah. Thanks for coming, Michael. My name is Andre. I'm from Plasma Capital, a London-based fund. In late 2017, you said Bitcoin should be worth around 8,000, I think. And then obviously we went past that, then came down. So that number, 8,000, was it based on some evaluation framework that you used, or just your feeling?
You know, I spent my whole life as a macro trader, and macro traders, they take in lots of information and synthesize it, and then you look at the chart. The chart is kind of the ballet of human emotion, and the chart told me, you know, 8,000 was a support level. As it turned out, it went through that. But that's what when I said that 8,000, I was just looking at the chart, really. It's why I think right now 10,000 is very clear. In the short run, even 6,800. If we take out 6,800, we're going to go higher. But really the level for us to be a bull market again is 10,000. Oh, they cut you off. Thank you. Hey guys, thank you so much. We exceeded our time.
Thank you.